topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Well, good morning, USA. It's a great day here at Tax Talk for You. Again, go to Tax Talk for You and subscribe. So you make sure you stay up to date. If you miss an episode or a show, you can go back and see our podcast there, iHeartRadio and Spotify and many other places that our podcasts are hosted at. I love to say this. This is a great day in America. It's been great, 3 weeks that we've had President Trump in office, and whether you like him or not, what he's doing for America is saving through his new agency, Doge, that saving America is billions of dollars. They have uncovered a lot of wasteful spending, which we all knew was there because we're overtaxed. And it's time to end overtaxation and get us to a balanced budget, get us to, doing what the federal government is supposed to do and not trying to manipulate what people in America are thinking or bribing them to vote one way or the other. Let's just get back to the necessities in life and let the states handle the issues within each individual state. That is what America was created and founded on, was states' rights, not all the rights being at the federal government level. That's my soapbox for today. But, hey, we're here to talk about partnerships. Ready, set, go. Let's learn how to form a partnership. We got about 10 steps in forming a partnership. So you decided, hey, you want to go into business. And maybe you're not going to go into business for yourself. Maybe you're going to go into the business with somebody else, even a wife, maybe a brother, brother-in-law, sister, sister-in-law. Whatever it may be that you're going into business with, you've got to decide, how are we going to set up this business? So if you're not going to run this solo, you start this partnership. You can form a partnership. Now, partnerships come in many different ways. You can have a general partnership, which is just a partnership that you go down to your local assumed name office and you say, hey, me and this other person is going to do this partnership. And then you have a general partnership. You can set up a partnership being a limited partnership. So you would have a limited liability partnership, an LLP. And you can also have a partnership as a limited liability company. So there's many different structures that you can have when you're going into business and wanting to be a partnership. So you've got to start thinking, which is the best for me? Where do I want to be as a partnership? And sometimes, before you go into business, it is good to consult two people. One, your tax guy, your tax coach, your guru that knows all about taxes and how having a partnership is going to affect your personal taxes for you and your other partner or partners. Because partnership can have multiple partners, more than one other person. So you might need to know, how is this going to impact my personal taxes or the other partner's personal taxes? The other one is to contact your attorney. Talk to your attorney, because partnerships sometimes come with some liability protections. So, and sometimes those liability protections are going to fall into the LLC category or the LLP category. But make sure you're discussing that with your attorney, because your attorney will be able to tell you, do you need liability protection, and what's going to give you that protection for you and your family. General partnership, from everything I understand, is not going to give you any of liability protections for you, your family, or your partners. So again, you might want to make sure that what you are doing, you are going to do it correctly, and choosing the right structure for your business and your partnership. Now, the good news is partnerships are not taxed themselves. So you're not going to face double taxation unless you make an election to be taxed as a corporation. Then your partnership could have or would have a tax. And then when they pass the money through to you, you will be taxed again as a dividend or as payroll. So your general partnership, your limited liability partnership, and your LLC, which would be multi-member and be taxed as a partnership, all pass net income to each of the partners based on either their pro rata share of capital. Your partnership agreement can give a different split between partners. It is different than the ownership percentages, but it will be passed through. So therefore you won't have double taxation where the company is getting taxed and then you're getting taxed. So you want to make sure that you're setting this up correctly, and then look at what is the tax implications for this. So now you decided, hey, I am forming this partnership. And, we've got 6 steps to be successful at getting this partnership formed and formed correctly. We see many, many mistakes of business owners who think they formed their business correctly, and they've done it incorrectly. They've taken the incorrect steps, and then the cost to get it fixed sometimes is more expensive than just getting it and doing it right the first time. So, first step, choose your partners. Choose them wisely. So, you're going through all this work to set this business up, and you're going to be working closely with your partners. So make sure you take your time when you're choosing your partner or partners in the business. Things you're going to make sure that they're bringing to the table. What skills? What are their strengths? Actually, what are their weaknesses as well? What is their knowledge? What is their credibility? So maybe you're not going into work with a family member. You're going with a friend. You're going with somebody outside, somebody you're bringing in because they've got the knowledge to do something that you don't have, and you need to bring them in. Or maybe they've got the credibility in that industry that helps add a level of strength to your business. You're also going to want to make sure that your partner is financially stable. You want somebody that has some strength and financially that you know that is not going to be hurting or bleeding the business absolutely dry of funds. You want them to have the same vision as you do for where this business will be going. And, maybe they bring in additional contacts and other resources for the partnership. I always tell people, hey, don't rush when you're selecting your partner and deciding to go into a partnership. Maybe when you're asking yourself, what do they bring to the table? Will we get along? Do we share the same values? And taking a little bit longer time to think about those issues sometimes is better. And maybe you can decide that, hey, maybe I just want to be a single member LLC. I want control of this business, and I can employ this other person. And therefore, if it doesn't work out, we don't have to unwind the business. We just can fire him or her and let him go. Or maybe you're bringing somebody in that doesn't share completely all your values, and you want to make sure you still control more than 50% of the business. You're the one making the decisions. Hey, remember, this is a commitment. This is almost like a marriage when you're going into a partnership. When we come back, we're going to also talk a little bit more in depth about determining your type of partnership in this business. And we'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Taxation Solutions Tax Relief, providing relief to individuals who owe the IRS money. And when you're in debt to the IRS, it puts so much stress on your family. With Taxation Solutions right now, if you give them a call and set up a tax analysis. So if you owe money to the IRS, you need somebody to investigate what they can do, how they can do it, and where the money is going to save you. So call Taxation Solutions, mention tax-free, and that's going to get you your 2024 tax return prepared for free with paid tax analysis. Again, that's your 2024 tax return done for free. This is personal 1040 with tax analysis done for you for your tax debt. So if you're owing the IRS money, make sure you give Taxation Solutions a call and let us stop the IRS from taking everything you own. And that number is 888-930-1016. Go to taxationsolutions.net. Hey, we're talking about forming partnerships and the different kind of partnerships that are out there. We've touched about this a little bit, but the general partnerships, generally it's a company owned by two or more people, and you agree to run it as partners or co-owners. And usually the profits are split, 50-50, unless you guys make some other arrangements, or maybe you change the partnership agreement on what the ownership percentages are. Generally, this doesn't provide any liability protection. If the business dissolves, you're both responsible for the debts 100%. So if your partner can't pay 50% of the debts, you're going to end up paying 100% of the debts. So you want to make sure that, again, you're vetting who your partner is going to be in this business. But, hey, these are low cost, easy to establish, flexible. But again, the downside is those personal assets are probably going to be at risk. Not to mention your partner and you are liable for the other person's actions as well. Your limited partnerships, these are going to be more structured than general, and usually have both a general and a limited partner. So you're going to need, when you start this business, you're going to have one general partner and at least one limited partner. So, a limited partner is only serving as an investor in the business typically. Doesn't have any decision making. They get ownership, but don't have as many risks or responsibilities as a general partner. And if you are too involved in the business, you can lose your status as a limited partner out there. General partners usually operate the company and assume liabilities for the partnership. General partner, you have control and responsibility when it comes to this limited partnership. So the other one is a limited liability partnership. It's in this organization, you, the owners, aren't held personally responsible for the business debts or the other partner's actions. With an LLP, you typically can't lose your personal assets if someone takes legal action against your business, but you still can be held personally liable if you do something wrong. So we take this as an example in the owner-operator trucking business. You're operating the truck. You get in an accident, God forbid, knock on wood if you're driving a truck. When you're involved in that accident, whether it's your fault or the other party's fault, you typically will end up getting sued. And you're not getting sued just in your business, but you're getting sued personally for your actions. Now, when you're an employee, if you have employees of the business and the employee does something wrong, in a limited liability partnership, your responsibility ends where the company is, and it doesn't go past that. So you're not responsible for other people's actions. You're only responsible for your actions. Or if you have a partner in this and they're driving the truck and they get into an accident, your responsibility ends at the limited liability partnership and it doesn't come to you. But again, consult your attorney. Make sure you've got everything set up right and you have the liability protections that you need out there to save you in case something does happen. LLC, as a partnership, you can have two or more owners. These owners are considered to be members in a multi-member LLC or LLC partnership. Members' personal assets are usually protected. In most cases, members can't be sued for the business actions or debts, but they can still be held liable for their own actions. Again, that same example, if you are a owner-operator and you operate an LLC, you get in an accident, you're responsible for your actions. the company and your other members of the LLC would not be held responsible for you, unless you have to talk to an attorney. They could find a way that you've been condoning the bad actions of this other partner. So, hey, in this day and age, in a litigious society, you never know where the lawsuits are going to come from or what reason why and where they're going to stop. Now, we also talk about in all these businesses, when you start mixing business and personal in your business account, guess what? They're going to pierce what the attorneys tell me is what they call the corporate veil. And when they pierce that corporate veil, now your personal assets get involved as well. So you need to make sure that you're not commingling funds and actually running personal through the business. That's why we tell people, hey, make sure you do only business through your business accounts and personal through your personal accounts. It's the first conversation we have with every one of our trucking bookkeeping clients as we start them on the road to great bookkeeping. Now, choices. Everybody's got to make a choice. How do you want to be structured? What is right for you? What is the best way of structuring this business? Sit down, talk to your tax guy, talk to your attorney, talk with your partner or future partner to make sure that what you guys are going to do, you're going to be able to dot your I's, cross your T's. So, make sure that you know how you're setting up your business. One of the most complicated things in setting up your own business and setting up a partnership or setting up an LLC or setting up a corporation is coming up with a name for your business and for your partnership. You sat down and talked about, the type of partnership. You've come up with creativity on how you're going to design this business and what you're going to do. But now you need that name. A name of a business is just as important because sometimes it identifies what you do. Trucker tax tools, for instance. We do taxes for truckers. And thus the name Trucker Tax Tools. We're giving our truckers, our owner operators, the tools they need to run their business and lower their taxes. We have a lot of fun in this business, and I speak at Trucker Success, which is a seminar put on by OOIDA, Owner Operator Independent Drivers Associations Foundation, every year. And when we talk to people moving out from W-2 drivers to owner operators and working for themselves. And, we've seen a lot of different creative names that are out there, and we have fun, and we have fun working with truckers. So, there's a lot of things to be said when you sit down and start naming your business to identify, hey, what do you do and how do you do it? When we come back, we're going to talk about registering your new partnership. And we'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. TruckerTaxTools.com. Working with truckers and helping owner-operators and keeping them on the road. This weekend, we were having a board meeting and talking about what can we do and what can we offer to truckers this year that is new and different from anything else we've ever done. And right now, if you go to Trucker Tax Tools or you call them at 877-996-2477 and talk to them about your taxes for 2024 and your bookkeeping for 2025, what we're going to do for you, if you're a new client and you call in, anytime, this week and mention Tax Talk for You special, we're going to give you 6 months of free bookkeeping with your paid 2024 tax return. Again, 6 months free bookkeeping with your 2024 personal tax return. So come to us, let us do your personal 2024 tax return, and we're going to give you that 6 months of free bookkeeping for 2025. I can't wait. I mean, it's a fantastic deal that they've come up with and the board has talked about. And, we're expanding, we're growing. We're here to help you as an owner operator stay on the road and know what your net income is from your business and how you can reduce your taxes and making sure you got every write-off that you can possibly have as a trucker. Hey, we got a question in before we move on registering your partnership. Randy asked if we can explain more what is the difference about what gets paid from where and what is that corporate veil we've talked about. Randy, thanks for the question. The big difference is you got to look at what you're paying out of the business. If it's a business expense, ordinary and necessary, something that's deductible for the business, it is business. IRS terms it ordinary and necessary. Your home mortgage is not a business deduction. Your home utility bill is not a business deduction. Maybe you've got a home office and you'll be able to take maybe home office expenses, but you can't write those things out of your business, your lawn care, things that you have going on that is personal, your family food. If you're buying coffee and supplies for an office and you happen to be at the store, you can itemize it and do an expense report to your business and have your business reimburse you. Or if you have a business credit card, you can do 2 orders while you're at the store. We do this quite frequently, and put the business stuff on the business credit card and the personal stuff on your personal credit card. It's that simple, just breaking down what are the business expenses, what are the personal expenses, and making sure you're not doing that. Corporate veil is a term we've gotten from the attorneys out there. So you've set up this limited liability partnership, and the liabilities aren't going to flow out of that limited liability partnership or LLC to you as a limited partner or as a member of the LLC. Of course, unless it's your own action. And it stays within the business, meaning let's say you've got a couple of people working for you and they do something wrong, the company gets sued and you lose. That liability stays right there within the company. They're not coming out after your personal assets. So it gives you that protection. Now, you've commingled business and personal, and it's like running a sole proprietorship. It's open season, and there's going to be no personal asset protection based on the attorneys that I've talked to about this and losing that corporate veil. And that's the same thing if you're running a corporation as well as LLC or limited liability partnerships, or even a limited partnership. So that, that protection doesn't stay there if you are commingling funds. So registering your partnership, you finally creatively came up with a great name. Well, first thing you want to do, if you're trying to do this on your own, is go to your Secretary of State's office and see, is that name taken? Because maybe you came up with that great name, Trucker Tax Tools, and you go and you find out it's already owned. Somebody already has that business. You will not be allowed to set up that business. You can also go and look, has that name been trademarked or copyrighted? And if it has, then you're not going to be able to set it up anywhere or get anything done. So if you're going to be doing business in more than one state, you've got to register with each state. If you have a domestic partnership in your main state and a foreign partnership, then in all other states. But it's also going to depend where you have your nexus. So where do you have your locations? If you only have a location in one state, but you may do things nationwide, you don't necessarily have to register your company across every state. Again, talk to your attorney and consult with the Secretary of State's office as well when you're going to register your business. Now, we talked about this in the beginning. You're setting up a partnership. You got to determine what are your tax obligations. So when you set up this business and you're going to set up a partnership, you're going to have an obligation to file a tax return or a franchise tax return with your state. You're going to be filing a business tax return, Form 1065. That's going to report your profit and loss from the business, assets in the business. And then that's going to be due on the 15th day of the third month after the end of your partnership tax year. Generally, partnership tax years are going to run calendar years because that's just generally where they're going to set up these partnerships for you. And then each partner is going to get a K-1 from the 1065 that gets filled out and filed with their personal tax return. You're supposed to get those K-1s by March 15th each year. And then you, as the individual partner, would have to file that by April 15th. Now, there are extensions out there that can give them 6 more months and get out to September, but it's also going to mean each partner is going to have to extend their tax returns as well until those K-1s are issued. So each partner would have to extend their tax return on top of that. Now, you've got your partnership, you've set it up through your state. Now you need to get an employer identification number. That is provided by the federal government, the IRS. You will file for that federal tax ID number, an EIN, filing an SS4. Be very careful filing these things. If you're not going to have people on payroll, you're not going to have employees, don't check off you're starting off the business with employees. The IRS is going to send you a letter telling you about your other tax obligations. Read it. Provide it to your tax preparer to make sure that your business is set up right within the taxing authority. So if you check off that you're going to have employees, the IRS is going to tell you you need to start filing 941s and 940. 941s are for payroll taxes. 940 is federal unemployment tax. They're also going to be talking to your state, and then your workforce commission or your unemployment office at your state level is going to require you to get a local tax number as well. So you need to get with the IRS, get that SS4 filed, get it filed correctly, get yourself set up as a partnership. It'll tell you when your first partnership return will be due. If you're setting it up now, your first partnership return would be due for 2025, and it would be due March 15th of 2026. So make sure you've got those items crossed off and checked as you're going through, and then make sure you're filing all the tax forms that are required for your entity with the federal government and the state government, because the fines and penalties are terrible when you miss those deadlines or you just forget you've got to file these things. And we've seen many, many people do that. When we come back right after this, we're going to talk about partnership agreements. We'll be right back.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking about establishing partnership agreements. So maybe you're a husband and wife, and you decide you don't need a partnership agreement for your LLC. It's not necessarily the end of the world. But again, I always suggest you have it. If you're outside of family, definitely create the partnership agreement. You got to narrow down each partner's roles, responsibilities, liabilities. To do that, your partners got to have that agreement. Partnership agreement becomes a legally binding contract that lays out each partner's role, liability, profit distribution, ownership level. And then you can refer back to that agreement during any time you have a conflict, or to find resolutions to those conflicts. Part of that agreement, you also might want to put a buy-sell agreement in there, so that if one partner decides they want to leave, there are terms there. Or one partner passes away. Does the other partner really want to be in partnership with that person's next of kin? Probably not. So you might want to have a buy-sell agreement in there too. And your agreement, this varies from business to business, and it's going to really depend on the type of partnership you choose. And if you're creating this, make sure you're following your state's particular partnerships laws and rules as well. And that's why we say, hey, consult the attorneys and make sure they get everything right. You want to make sure that you've dotted all your I's and crossed all your T's. Now you're in business. You've got the partnership agreement. You got the employer identification number. Now it's time to go obtain any licenses or permits that you need. So sometimes before you can begin operating, you've got to have a license and a permit. And it really depends on your state and local requirements. So not only are you going to be dealing with the state, but you also got to check locally what's required of you and what permits, whether it's a license, a sales tax permit, resale certificates, building permit, sign permit, any industry specific licenses. So make sure you're checking with your state and local taxing authorities and local authorities what is required. I mean, even if you're renting a building and you're going to go put a sign up, many localities have sign permits that are required. And if you don't put them up and get the permits, as well as like occupancy permits, you could be fined. Red tag where you can't enter the premises, you can't be doing business there. But again, check with your state and local authorities. But you've got your business now. You've got the employer identification number. You've got all your partnership agreement. You got the certificate from the Secretary of State. It's time to go open that bank account. Open that business account with the business name. Make that first deposit. Put both yours and your partner's money in there for what was designated to be the capital for the business. And then make sure that anybody that is in the partnership, that's in the partnership agreement, that has authority to sign on it, can sign on that account and get them signature cards at the bank. Your bank will help you with this. I believe many banking institutions can put a limit on your account where certain things require 2 signatures, so that you or your partner can't go and write a check for excess amount of money for something that hasn't been approved that are out there. So set the limits within that partnership agreement, and then make sure those limits can be enforced within any banking institution that you're working with. Last option, last thing you need to do is choose a bookkeeping accounting option for your business. You need to keep track of records. You need to make sure that you know what the financial performance is for your business. So you're an owner operator out there. It's your first time. Are you making money? Where's the money going? Always seems like there's more money going out of a business than coming into a business, especially in a startup. So, whether you're doing it yourself and you're manually recording transactions, using accounting software like Xero, or hiring a bookkeeper like Trucker Tax Tools, you need something that's going to keep you organized and keep you up to date, knowing that, hey, we got things right. Hiring bookkeeping services like Trucker Tax Tools for your trucking business gives you peace of mind knowing that your books are in good hands and are going to be accurate, as long as you're providing all the information that is requested and needed. And, yes, it's more expensive than the do-it-yourself plan out there, but do-it-yourself plan doesn't always ensure accuracy, doesn't ensure that you're getting every tax deduction possible for you and your business. Hey, again, while we're talking about bookkeeping and taxes, if you're an owner-operator out there, truck driver, call us today, 877-966-2477, 877-966-2477. Go to truckertaxtools.com, set up that free consultation. You pay for your 2024 tax return, you're going to get 6 months of bookkeeping for free, the basic bookkeeping for free. Hey, it's a fantastic deal for you. It makes your life run much smoother. And then you get more time, with your family. If you're a small business and you're running a partnership, I suggest you get a good bookkeeping service that's out there. Because this gives you somebody to bounce questions off of. Make sure you're getting all your tax deductions. Make sure that you're getting all the write-offs that you and your business deserve. And now that you're running a partnership, those working in the partnership also has to have a reasonable wage. Now, we're not talking owners in a partnership having salary through W-2 wages. No, we're talking about what the IRS calls guaranteed payments. That is compensation for owners in a business that are working in the business to have a reasonable wage for everything that they are doing in the business. Now, that means, hey, you are the active owner in the business and you're doing a lot more than your partner. You're getting paid through these guaranteed payments. Plus, you're getting distributions based on any distributions that you're taking based on the ownership profitability and distributions based on your percentage of ownership. So, you got to sit down and look at that and decide, hey, which is the best way of going. Hey, we got a question in from Alex. What is better to start, an LLC or an S Corp? Well, Alex, that's a really complicated question. I think we talked about S Corps in one of our previous podcasts. I'm going to touch base on it just really here a little bit, but you can go check out one of our podcasts and where we talked about S Corps and why we would use an S Corp. But if you are a single member LLC, not a multi-member where we're talking about a partnership, a single member, your net income is going to be taxed for Social Security, Medicare, 15.3%, both sides. If you're making a lot of money, over 100,000, S Corp might be the right option for you. But if you're a multi-member LLC, it's giving you that same savings by using that guaranteed payments as an S Corp does through payroll, but you don't have to run payroll. So if you're a multi-member LLC taxed as a partnership, so maybe even husband and wife and choose to be taxed as a partnership, then you could have savings on that Social Security and Medicare by limiting the guaranteed payments, the reasonable wage paid to you as an owner. But again, if you are a single member LLC and maybe you're only making net income 40 or 50,000, it's not necessarily worth going to an S Corp for, because you do have to run payroll for yourself. Now, if you got employees, adding one more employee doesn't hurt you, and putting yourself in there at a reasonable salary, depending on what you're doing for the business, might be worthwhile. Hey, set up a time to talk to your tax preparer, talk to your tax guy, and determine what is right for you. If they should be able to run through and do that. If not, call Taxation Solutions. I know they can help put a solution together for you in regards to whether you should be a single member LLC or an S Corp. There's a lot of analysis that goes into it. So, generally those are the guidelines we use, but we also sit down and talk about what's expected future for your business as well. Hey, now you're in business. Congratulations. You've got your business going. You got it started out there. Market yourself, market your business. Do what you got to do to get the name out, get the referral out. Sometimes marketing is the hardest thing that anybody does. It's selling yourself, selling your business, cold calling, getting those referrals from friends, family. Let everybody know. Shout it from the tallest mountain. Trucker Tax Tools is in business helping truckers nationwide. Taxation tax relief. Taxation Solutions Tax Relief is helping save millions of dollars in tax debt for our clients all across the country. See, it's announcing these things not just to you and your partner, but to everybody that's out there. Come up with your elevator pitch, your 30-second pitch. My daughter, who's at Texas Tech and getting ready to apply to veterinarian school, has to have her elevator pitch, her 30-second pitch, to help talk about why she wants to be there. That's what you need, that elevator pitch. Hey, our elevator pitch, we're here at Tax Talk for you every Monday, 10 a.m. Eastern Time, talking about taxes, talking about bookkeeping, talking about what can save you money every day across the board. Hey, tune in 10 a.m. Eastern Time right here at Tax Talk for you. God bless you. Have a wonderful week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.